Before we hear from you and from the three rapporteurs of the three sessions about the conclusions of your discussions, I would like to invite Martin Schoenberg from the United Nations Environment Finance Initiative to present his perspective on mobilizing the financial sector to support energy efficiency. Martin is representing a global partnership between the United Nations and more than 230 actors from the financial sector. The UN Environment Finance Initiative is our key partner in the Sustainable Energy Investment Forums and a very strong contributor to sustainable finance initiatives across the globe. So, Martin, the floor is yours.
Thank you very much. So as was said, I work for UNEP-FI. We work across banking, insurance, and investment. So we have the entire investment process, the entire financing chain in our membership, and we work on a range of issues which are essentially motivated by two factors. It's the implementation of the Sustainable Development Goals, the world's agreed values, and the Paris Climate Agreement. And my presentation will give you a little bit of an overview of where the energy efficiency market stands now. It will talk about some of the challenges that energy efficiency represents, as well as some of the potential opportunities for public as well as private sector intervention. And it will also mention the G20 work, which is ongoing at the G20 level on energy efficiency finance. Now, I don't know if is this the clicker? Yeah. So here we go. So first of all, we're all familiar with the headline targets of the Paris Agreement, the below 2 degrees, well below 2 degrees and the 1.5 degrees. There's been a variety of research into the investment need that represents, and the most conservative estimate is actually that we're talking about roughly 1.2 trillion of global investment into energy efficiency, grids and renewable energy up to 2050. So it's a major investment opportunity for financial institutions, which explains the growing interest into the sector. The gap is roughly at 200 billion, so we're seeing energy efficiency investments standing at 230 billion a year. It's not a small market, it's actually quite a major market. But of course it's dispersed in summer, it's a major market. And the investment gap is at roughly 200 billion. So we recently launched a report, UN Environment launched a report on the emissions gap, which the Paris Agreement, which is necessary for Paris Agreement implementation. And we can see that if we take all the NDCs and we assume that all these NDCs get implemented, which is probably a likely scenario considering technology costs have gone down and whatever else, if all these NDCs get implemented, we still need to scale up our efforts and accelerate our efforts by a factor of 3. So that means until 2030, we have to act 3 times as ambitiously as currently governments have pledged. And for the 1.5 degrees, which is quite a very ambitious objective, we're talking about a factor of 5. The good news, however, is that most of the majority of emissions will have peaked by 2030. So the countries which are essentially causing those emissions, 55 or 60% of those emissions will have peaked by 2030 according to current policies. And of course, if policies are stepped up, we can achieve a peaking earlier than that, which is absolutely essential in order to implement the Paris Agreement. So the emissions gap stands at 13 out of roughly 65 gigatons for 2 degrees. So that essentially means that we need to save, until 2030, we need to save as many emissions, a quarter of the emissions that we have emitted up to now, and will have emitted until 2030. So it's a really ambitious effort, but it's necessary in order to stay within the 2 degrees threshold. So when we now come to energy efficiency, we can see that there's a strong macroeconomic case. The macroeconomic case is best calculated when you look at the difference between the notional level of GDP, so essentially the level of GDP as it would be without energy efficiency, and the actual level of global GDP as it is in reality due to energy efficiency. We can see that we are already saving 2.2 trillion of US dollars, which is twice the size of the Australian economy. So energy efficiency is already contributing to value creation in the economy. However, there's a large untapped potential until 2035. We can see that the largest untapped potential is in the building sector, where we need to accelerate efforts by a large extent, but also power generation, transport, and industry have an untapped potential which is significant. So why would financial institutions get involved with energy efficiency? There are various reasons for that, but one of them is, of course, that Regulatory requirements and fiduciary duty are increasingly requiring investors and banks to consider energy efficiency because it's just a prudent way of assessing risk. Also, there's a need for an energy price hedge, especially now that energy prices are slightly rising again. Energy efficiency provides a hedge against that. It has short payback periods, which we have discussed today is not always the best thing, but of course it is a short payback period is still very attractive, and refurbishments pay off, especially in the premium segment, but also in other segments according to current evidence. And they are probably paying off in most segments once the evidence becomes robust. So the small energy efficiency argument is essentially false, because if we look at the market size, we're talking about 230 billion in 2016, so it's a significant market, which is on par with renewable energy, and is also on par with investment into electricity grids. So the three investment channels essentially are now equals in terms of investment levels. So how do we transform the energy efficiency finance market? Maybe I don't like talking about challenges too much, but we should just remind ourselves of 4 challenges that define the energy efficiency opportunity. The first one is complexity. So we're investing into energy efficiency across asset classes. We are investing across sectors as well. So it's distinct from renewable energy, because renewable energy, as we also heard from colleagues today, could be considered an asset class, or as an asset class with an infrastructure. So it's a standardized project finance approach which gets employed. For energy efficiency, we're talking about a much wider range of financing structures which are necessary. Small ticket sizes, which is confirmed today also by Allianz, that Allianz is seeing that as a need, as a cause for the need for aggregation. So that's, from an investor point of view, that's a key challenge to overcome. Transactions are embedded into other transactions, especially in the real estate market, but also in industry transactions occur rarely as standalone transactions. And there's a need for coordination and common frameworks between project developers, investors, financiers, and project hosts. So to mainstream energy efficiency investment, there's essentially a need of moving from, and we have already advanced quite a lot in the European Union, but generally, if you look globally, we need to move from a nascent market, where essentially concessionary finance and subsidies are the initial way of capturing the energy efficiency opportunity. We need to move on to shared risk, which is mainly via guarantees. So private sector investors would already start taking more of that risk, but would still have some sort of protection via the guarantees. And then finally, we would move to a scenario, and that's when the market is really mature and when we have market transformation and mainstreaming, where private financial institutions are doing this as a default way of doing their business. And that's when you have shared standards. So something that has already happened to a large extent with renewable energy, that you have standardization, that also needs to happen with energy efficiency. And as you can see here, the risk level is going down, because both the perceived risk level and the actual risk level, because risk management techniques improve, and at the same time market penetration increases. So that's a way of mainstreaming energy efficiency into the market. So standardization has a number of benefits. First, it lowers transaction costs, which, as you will be aware, is one of the key obstacles for energy efficiency. It lowers market entry barriers. It creates a greater deal of fungibility, and of course it grows the market overall. So standardization for energy efficiency is a key consideration, whilst leaving room for innovation. So in the final section of this presentation, I want to talk a little bit about the global and European energy efficiency frameworks for financial institutions. So first of all, as has been presented already today, there is a G20 toolkit on energy efficiency finance that brings together best practice from 15 G20 economies. And it also shows a commitment by over 120 banks, by over 4 trillion of institutional investor capital, and it shows best practice by insurance companies. So that toolkit is a way in which there can be a common framework for all actors involved, including public financial institutions and policymakers, to grow the energy efficiency market. However, unprecedented collaboration, of course, is required between policymakers, finance institutions, and development banks. And if you look here at this slide, you can see that development bank intervention is extremely important because it is the most targeted and it addresses market failures. However, the potential is significant if you also bring in insurers, investors, and banks. Banks, for example, have balance sheets of over 110 trillion. So there's really a huge potential to involve private financial institutions to provide the necessary capital for this activity. And the key here, again, is the mainstreaming of energy efficiency. So moving towards this becoming a standard practice. And maybe one example to give in this context is the nearly zero energy building standard that the European Union has adopted. That essentially makes energy efficiency a standard component of all new builds. So that's a situation that we also need to achieve with building renovations, that it essentially is a consideration that every market participant has by definition. And as has been mentioned, I just wanted to give a quick summary of where the Energy Efficiency Financial Institutions Group is heading. So it's going into its third phase now. There will be a focus on 2 working groups which are launching early next year on the energy efficient taxonomy. So that links with the technical expert group of the European Commission on sustainable finance. And there will be a working group assessing the correlation between energy efficiency improvements and loan performance. So the financial institutions and everybody here should consider joining those initiatives. It's a key way of scaling up this market. And then finally, there will be further working groups on the deep database, the underwriting toolkit, quite a few other topics. So yeah, and then finally, I wanted to conclude by making the financial institutions who are here aware of the energy efficiency finance platform that UNEP-FI is setting up as a vehicle for tapping into EFIC. So that will offer global information exchange between financial institutions on energy efficiency. So we just came back from a mission to Japan where we engaged with the incoming G20 presidency. And there's actually a lot of encouraging practices in Japan as well that can be shared as well as in North America and the rest of the Asian market. So this is a vehicle through which there can be an exchange of information, and it is also a way of tapping into the EFIC initiative. So please do consider joining that initiative as well. And with that, I thank you very much for your attention and give the floor back to the moderator.
Well, thank you very much, Martin. And now we will turn to the report of the 3 parallel sessions with Oliver, Martin, and Henriette. So we will ask the 3 to come on stage. And we will start with the first parallel session, which was on buildings, and which was moderated by Oliver Rapf, who is the Executive Director of the Buildings Performance Institute Europe. So Oliver, what were the main messages emerging from your discussions?
Thank you very much. Well, to summarize, well, you gave me this wonderful form here where I had to define 3 key points and 1 summary sentence, which is quite difficult when you have 5 very interesting presentations and a 2-hour session. But my summary sentence goes like this, and it's really a high-level summary. Well, innovative solutions to increase financing for building renovation and efficiency are existing. There is definitely not a shortage of ideas, but they now need uptake from mainstream financial service providers and the financial service industry. For some of these solutions, there is a long history of experience and therefore evidence that these solutions do work, in fact. There is also ex post analysis available. Other ideas are more innovative and need to develop further and need to overcome the valley of death which every innovation in whatever field needs to overcome. So that's the high-level summary. The 3 key points were, and I will probably not do complete justice to all the presentations, but I had to focus on 3. Energy performance contracting needs to grow and expand also in the private residential sector much more. It is a concept, EPC is a concept which is quite well established, at least in some countries in Europe, in the commercial sector, but the private residential sector is a market which has been neglected so far quite significantly. The second key point is that trust, expertise and expert advice, quality control and performance guarantees are all enabling conditions to trigger more investment in energy efficiency in buildings. So they are key requirements. Without those, we will not be able to trigger more investment. And the third key point is that it's important to get the timing for the investment right. When we look at the private homeowner market, people will invest once or twice in their property in their lifetime, not much more. So it is very important to get, to find these points in time and to use them also for significant efficiency upgrades. And second, that the pooling of investment opportunities will be essential if we want to really generate the interest of the mainstream financial service industry. That's it. Thank you very much.
Thank you very much. And now we go back again to you, Martin, because you were in the second session, and you can tell us about the key points that emerged from the discussion on industry and SMEs in particular.
Sure. So we had a very lively discussion. Essentially, the question we tried to grapple with is the question of how do we go beyond the 3-year average payback period. That has been also discussed this morning. So how do we get industry to move more into the capital-intensive activities which are necessary? And essentially, the three presenters sort of concurred that guarantees can be a good way forward for de-risking those investments, so for making sure that because credit risk insurance is only available for a 3-year period normally. So if you want to move beyond that, you actually have to look at guarantees as well, which would be provided by a development bank, for example, in order to scale up this market. We also agreed that actually lessons from the building sector, even though energy industry is quite advanced as well, but lessons from the building sector can be helpful. So for example, we concurred that a lot of banks are now moving into the energy efficient mortgages and green tagging areas because they consider energy efficiency to be a source of understanding their customers better as well. And that energy efficiency as a source of customer insight can also be a possibility in the industry sector, because an energy efficient industrial player is also an industrial player which has good corporate governance. So that's another element that actually it shows that energy efficiency is a source of good governance. And then finally, we also discussed on, of course, the availability of capital. So capital is readily available. We are still in a low interest rate environment. There's abundance of liquidity. So the question, even if you have a stretched balance sheet, the question is not so much the investment capacity, but the supply of projects. And in that sense, it is important that we look at the entire financing and project development chain in order to realize industrial energy efficiency upgrades. So that was the third key insight from the lively discussion this afternoon.
Thank you very much. Henriette, you were in the transport and mobility session, so what did you learn and conclude there?
So, hello. I come from DG Move, so very happy to be here. The summary session, the summary sentence of our session was, this was the first, but definitely not the last transport session at your events. Yeah, so there was a lot of interest, a lot of discussion, and we would like to continue having these kind of transport sessions at your event, cycling or program. So that was the summary session, summary of our session. 3 key points. The first was about financing sustainable transport requires a number of things. The second was about EV buses, electric buses. And the third one was about integration. So going to the first one, financing sustainable transport requires a number of elements to be put in place. Firstly, is a question about, again, aggregation of smaller projects, how to do this. But if you think about transport, a good Euro 6 bus costs around 300,000 euros, so maybe investment size is around that time. You see that many new forms of financing are being developed, also because we're moving from asset ownership to asset use. So you use your transport mobility, you use a type of mobility, you use mobility as a service. And finally, it was about assessing risks. So if you move to a bigger scale, you have to deal with 3 types of risks that are quite difficult to assess. The first one is the technology risk. The second one is the market uptake risk. Will they buy it? Will the market move? And the financial risk was actually not so high, but the market uptake risk was a lot more relevant there. The second key point was about electric buses as an example about what happens if you have a massive increase in demand and not so much supply, because you actually have to wait to get your electric buses delivered at the moment. They're waiting time, so it's difficult to supply them. You see that cities and fleet managers, bus operators are very keen to make their public transport fleet clean and low emission. And it's not only the emissions, but it's also about the noise and the convenience. If you have an electric bus, you can drive with it in a retail district. You can drive with it inside a hospital, yeah, or inside a library, and think about urban planning in that way. The other point is then, okay, if there's such a big demand, how can we finance this? And there are many ways of doing this, and the EIB is playing a big role in that. The third and final point, which really led to a lot of discussion, also because we had many different people from many different backgrounds in the session, was about integration. And really, integration of energy, transport, and digital is essential to move to a low-emission transport system of the future. So what is needed in our ICT digital platform infrastructure, what is needed in our energy infrastructure platform to make this low-emission transport system work? And so we need to get those 3 pieces of the puzzle in the right place, and it means a lot more cooperation between sectors, whether this is the finance, the regulatory, the procurement, but also at different levels, whether it's local, national, and regional and EU. So very exciting discussion, and I would like to continue that.
Yes, we got the message. Thank you, Henriette. Indeed, we had to wait for our 13th session to get transport and expand our scope of discussions, but it's very useful, and we will certainly continue, because we saw in these sessions that we can learn from each other. The challenges are numerous, but very often they are similar in the 3 areas. What we saw also is that we need to invest beyond technological innovation. We need to invest in new business models, in new services, and that's something that we need to reflect on. Now, before we close the day, we will have concluding remarks by both Stefan Besser and Paul Hodson from the Federal German Ministry and the European Commission, respectively. So I will call on both of you to join us on the stage. And shall we start with Stefan, if you're ready?
Yes. Julien, thank you very much. And thanks for everybody who joined the conference today and participated in the very lively and fruitful discussions. Only a few words from my side. It's exciting to see how many ideas and proposals stemming from the EFIC process have now evolved and developed into concrete tools, business models, and all of this looks to me very promising in order to increase and improve the market for investments in energy efficiency. But I also feel that we now have to enter into a new phase of our work. Let's call it a proof of concept, We have to discuss how to roll out these tools and how to implement them in the market. And I think this is something we should jointly discuss, how we can support these developments. Oliver Rapp just said in his summarization, now we need an uptake in the mainstream markets for finance, and that's absolutely the task we have to think about how to deal with this. And I think we are well prepared, and the projects are very interesting. The tools, for me, look very good and promising, and now we need to go into the discussion with the actors on the financial markets. They are involved, of course, but now we have to discuss how we can convince them to make use of these proposals in their daily work. That's from my side.
Thank you. Paul?
Thank you, Stefan. In 2004, I started working on energy, and the first thing I worked on was offshore wind. And there were two things that everybody said. The first one is, how are we going to finance offshore wind? And the second one was, how are we going to get it to be that your dishwasher will turn on when the wind is blowing? So the demand response problem. We heard earlier that the question of how to finance offshore wind, which felt just as horrible as our financing problem in energy efficiency feels today, is, quotes, solved. And we are able, I visited last week the biggest wind farm in the world, which is just off where my family came from in Barrow-in-Furness. And this is being built with a large amount of private money and a bit of public money to make it work. So that problem is solved. The demand response issue is still not solved. We still don't have systems which allow our dishwashers to do their washing when the wind is blowing. I think, so which of those two is our energy efficiency financing problem? And I think today makes me think, and I think Stefan is saying the same thing, Oliver is saying the same thing, it's more like the financing of offshore wind than it is like demand response. I think we do have paths forward, and those paths forward make sense. And some of the examples we've been hearing about today are things which of course things will go wrong that we haven't even thought about, but there's no obvious obstacle to upscaling those things. Now, we don't have, another advantage we have is, we don't have the hundreds of millions or the billions that are needed, but we do have access through Horizon 2020, through the Future Life Programme, through the next multi-annual financial framework, through the renewable money. We do have access. If public money is part of the solution to these problems, we do have access to some public money which we can use more cleverly. So I am optimistic that we will get to the proof of concept stage, and I am optimistic that we will get past that. And it's been really, the discussions I've heard today have helped me to reach that level of optimism. But still, it's going to be very hard work.
Thank you very much, Paul. And I think that summarizes well the gist of our spirit today. There are numerous challenges ahead, but it is possible. It is possible, and on the EU side, we are really committed to support you through public funding via our agency. We want, and those were your three priorities this morning, Paul, to optimize the use of public funds, to aggregate investment projects, to help de-risk the energy efficiency investments. We are doing that now. We will do that in the next long-term budget from 2021, and we are very actively following the negotiations in the Council and the Parliament of the next Horizon Europe and LIFE programs in particular. So together, let's continue the work, continue to make sure that we can make a change that is in line with our climate objectives. And before closing, I would like to thank the organizers, and in particular, my colleagues, but also Andrew Deacon, who is here with his whole team and organized the event today. A word also to thank a lot the interpreters today who translated everything we were saying from English mostly to French and German. And I would like to inform you and those who are watching us via web stream that all the proceedings from today's conference will be available on the website of the Sustainable Energy Investment Forums, where we can find also the records of our webinars. Thanks a lot. I wish you a very nice evening, and I invite you all to join us for the closing cocktail. Thank you.